Hello, everyone. Good morning to you all. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. Well, I'm very excited to welcome you to the week's second edition of the Forex Morning Mastery with Sheriff Daramola. Well, it's been quite an interesting 24 hours, let me say, as we can see that the market condition is still looking a little bit skeptical, and this is as a result of the current escalations going on, conflicts going on in the Middle East, as participants in the market are still trying to digest what is likely going to happen, and of course use fundamental factors to buttress whatever decisions they are going to be making for this week. So today's trading session, we are going to be looking at the charts from a technical standpoint to try to understand the psychology in the market, and of course use the information to position ourselves strategically ahead of the London and the New York session. Well, in anticipation of today's Forex Morning Mastery, I have already conducted a comprehensive analysis on all of the assets on our watch list for this week, and of course using simple fundamental tools such as trend lines, key levels, and of course chart patterns to gain valuable insights into the historical price movement of this asset, and of course use that information to strategically position ourselves ahead of today's trading session. So far this week, we have been monitoring three major assets, which includes the US All Spot, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot, of course. And on all of these assets, we are going to be seeing how to position ourselves ahead of today's trading session. For those who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. Well, we usually gather here on a daily basis, 8:05 a.m. UTC, 9:05 a.m. West African time, where we come to review our trading positions if we still have any, and of course, use the information we have on the chart to position ourselves ahead of today's trading session. I encourage you to stay tuned in so you don't miss out on the valuable ideas we shall be deliberating on today, and of course be part of the subsequent editions, as the more time you spend with us, the better you get to understand how our strategy works and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board. And now, with that being said here, let's dive right into the business as usual. I see your comment, Ika's Diary. Good morning to you, and I'm very excited to have you around with us this morning. So as usual, the first thing we usually do, of course, for those who have been part of this community for a while now, you know that we do want to be checking on the economic calendar, as these fundamental factors often manifest on the charts in technical patterns and of course price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So for today, October 17th, that's Tuesday, we do have a series of impactful events for today. And usually, we focus on high impact event. But for today's session, I wanted to include the medium impact event, as if you do that, you will see that we have quite a lot of data to look forward to today. Now, the first event here is came in, because it has already happened, came in from the United Kingdom, and this is the average hourly average earnings, which includes bonus, of course. So this is another index here that gives us an insight into the health of the labor sector, and in fact it is seen as a short-term indicator of how levels of pay are changing within the United Kingdom economy. Now, generally speaking, of course, a high reading is considered as positive for the pound sterling, while a low reading is considered as negative. Now we have the data that came in this morning. We had a 7.8%, we just came in just as expected. Then we also have this one, the 3 months on year, which came in at 8.1%, a little bit lower than the previous data. And in fact, we begin to see some reaction in the GBPUSD. So we are going to be looking at that in a moment. Then in about 45 minutes from now, we are going to be having a speech from Dr. Swati Dhingra, who is an external member of the Bank of England's Monetary Policy Committee. Well, she's going to be giving a speech in about 45 minutes, so everyone will also want to be looking forward to what she's going to be saying, as this will give us an insight into the health condition of the United Kingdom, and of course insight into monetary policies of the Bank of England as well. Then in the other one we have here today, we have some other speeches from the United States. Of course, the Fed's William speech. William is the president of the Federal Reserve Bank of New York, so he's going to be giving a speech in about 4 to 5 hours from now, and 30 minutes after we are going to be seeing the retail sales data, which is another high impact event that everyone in the market will be looking forward to. And for those who don't know what the retail sales is, well, this is a data released by the US Census Bureau, and it measures the total receipts of retail stores. So changes in retail sales are widely followed as an indicator of consumer spending, and generally speaking, a high reading is considered as positive for the US dollar. Now, if we look at the previous data we have here, the previous month came in at 0.6% growth, and the consensus for the month of September is coming in a little bit lower than the previous month at 0.3% growth. So with this situation here, it is a sign that there is a little bit of contraction compared to the data we had from the previous month. And as a result of this, we are going to be looking forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectation? Then we also have another medium impact event coming up in about 6 hours, and that is the industrial production from the United States economic docket. Now, on this one, this is released by the Board of Governors of the Federal Reserve, and it shows the volume of production of U.S. industries such as factories and manufacturing. Now, if high industrial production growth comes out, this may generate a positive sentiment. Now, looking at the data we have here, things are not looking promising. Compared to the previous month, there is an expectation of 0%. So it shows that there was no growth at all for the month of September. So we're also going to be looking at that data too as well. But from what we can see here, from the summary of what we can see here, it shows that the consensus is not voting a positive scenario for the US economy, which is a sign that we might likely be seeing a further decline in the US assets for today. We are not jumping into conclusions. We are still going to be looking at the chart to give us an insight into what to look out for. But one thing for sure here is that as technical traders, we do understand that the anticipation of this event alone has a tendency of influencing market sentiment. And as a result of this, we are going to be looking into the chart to see how we can position ourselves in such a way that we can capitalize on that move using simple tools such as trend lines, key levels, and of course chart patterns. So with that being said, here let's dive right into the business. And I see your comments. Ika's Diary says is new, and could you please tell me what is the sequence I should watch your video? So I want to assume you want to know how frequently I do my videos. Is that what you mean? If that is what you mean, then we do have this daily Forex Morning Mastery, which comes up 8:05 a.m. UTC. Then we have the XAUUSD live window, which comes in about 5 during the New York session, to be precise. And then during the weekends, I do share my plans for the new week. So this is basically what we do here on the Sheriff Daramola platform. So I do hope I answered your questions. So while I move on to the next asset on our watch list. So the next asset we are going to be looking at this point in time is going to be the USOILSPOT. And in fact, unfortunately for us, yesterday we were taken out of our buy position in a loss, as we had, remember, we had this breakout of the $86.60 level at the beginning of the yesterday's trading session, as you will see here. So the first thing we noted here on Monday was that consolidation phase, which emphasized the level of indecision in the market at that point in time. So we saw here that price was confined within the $86.60 level and the $85.90 area to give us an insight into the level of uncertainty in the market at that point in time. And of course, you know how we do it in this community. Whenever we have this kind of range, we do want to exercise patience, waiting for either the breakout of the resistance line or breakdown of the support line for an opportunity to trade. Now, what I said here yesterday is that considering the strong impulsive move that led into the formation of this consolidation phase we had here, that it makes quite a lot of sense to have a buy stop order above the resistance line, which actually got triggered during the first hour of the New York session yesterday, and we saw price moved about 40 pips thereabout before sellers came in to take us out of that position. And if you remember vividly, I made mention here yesterday that if we are going to be selling the USOILSPOT, the only condition to sell is for price to break down, retest the structure, giving us a confirmation before we join the decline to the downside. And this is exactly what happened about 3, 4, 5 hours into the New York session yesterday to trigger our first sell position for the week. And since then, price action had moved about 70 to 80 pips in our favor in that regard. And for those of us who are part of my Trading View and Telegram platform, I did share an update this morning as regards to what we are going to be doing. And one of the first thing I said is that we want to be securing this current sell position as we are beginning to observe some buy pressure resume around that week's key level situated at the $85 level. Now, because of the situation, I'm of the opinion that we might likely be seeing some bullish momentum, but that does not ignore the fact that sellers could still come in at this point in time. Now, if we look at the recent development in the US oil, in the oil market, there is this likely increasing of global oil production due to the recent US Venezuela deal, which is currently going on right now. So there is this deal going on where the US is about to drop some sanction from the Venezuelan government in such a way that they are now allowed to produce oil into the global market. And if this scales true, then the supply will increase. And of course, when supply increases, then price will definitely drop in that regard. So because of this situation going on, we can see a little bit ease in price action. Now the question at this juncture is, how far will this ease go, or is there still chances that buyers will continue to the upside? Now let's look at things from a technical standpoint. Now for those who had watched my video on the US Oil Spot this week, that is my preparation for this week on the US Oil Spot, I acknowledge two levels. The first one here is our key level for the week, situated at the $85 area, which of course was also serving as the neckline of that reversal pattern we spotted on the higher time frame. Then we also had the $83.50 area, which was also a neckline of the reversal pattern. So let me do this for the sake of clarity here. So on the higher time frame, we have this setup here. We had an impulsive move to the downside. Price was unable to break down the $81 area, and we had this beautiful double bottom structure here with the neckline situated at the $85 area, which was broken on the last trading day of last week. Now, with the breakout of that structure, I was telling us at the beginning of the week that we might likely see a situation where price will drop into the $85 area, where the appearance of buy pressure will be all we need to capitalize on an uptrend move. Now, in addition to this reversal pattern is another reversal pattern within the reversal pattern, a very interesting situation we have here. Now, if you look at the structure following this impulsive move, we have this double bottom structure here where the $83.50 level is also serving as the reversal pattern, at the neckline of that reversal pattern. Now, what I said here yesterday is that if price drops below the $85 area, that is the key level for this week, then we might be looking at the $83.50 level for an opportunity to join the uptrend move. Now, going into the London and New York session today, the $85 level is going to be playing a significant role in determining the next line of action for today. Now, right now, I told us all that we should move our stop losses, secure the current sell position while we wait and see how price is going to be reacting to this $85 area. Now, if buy pressure persists here, then we want to be looking out for opportunities to buy. But if we do see price break down the $85 level, retest the structure, please listen to what I'm saying right here. We want to see the breakdown happen, price retest the structure before confirming that price will continue to the downside. So if this happens, retest of structure in our lower time frame, we want to be joining that decline to the downside and having our TP target around the $83.50 level, where I said we might be seeing another opportunity to join that uptrend move. Now, that is how we are going to be selling the US Oil Spot today. That is adding more position if the market presents that opportunity. Now, if price does not drop below the $85 area and instead buy pressure persists below the above the $85 area, then we want to be getting ready to buy. Now, let's look at what has been going on here in the last 24 hours. So this morning, I spotted this trend line here, which has been capturing the lows here, giving us some buy pressure as soon as price tested that trend line. Now, with the way things are going right here, how do we capitalize on the uptrend move? Now, look at what we are seeing right here. We have something like this, and then we have this situation here. If price transitions into something like a reversal pattern in the form of an inverse head and shoulder pattern, then we might be seeing the $85.97 level as an area to capitalize on an uptrend move. So what I'm simply saying here is that if price does not drop below the $85 area, then above the $85.90 level could welcome buying opportunities here. So I would look forward to breakout, retest for confirmations before I join. Then if we can join a buy position above the $85.90 level, then we can have a buy stop order above the $86.60 level to capitalize on the uptrend continuation and hereby maximizing the uptrend move. So this is how we are going to be joining the uptrend scenario on the US All Spot for today. But if price breaks down the $85 area, remember what I said there, we need a breakdown. We need a confirmation like a retest of the 85 to join that decline here. But if price breaks out of the $85.90, then we want to maintain a bullish bias. So simply put, our center of focus for today is between the $85.90 level and the $85 area, where depending on the direction of the breakout today will determine where price will be going for today's trading session. So let's be on standby for this, and you do want to be marking out this level. And of course, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates on what we are going to be doing as soon as price gets into the structures. So these are my views here on the US All Spot. If you have any questions as regards to my explanations, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds off to see if there are any questions before we jump into the next asset on our watch list. And as you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. Good morning, Adeni Babalola. I see your comment. Thanks for that response. So, Ika's diary, you can, Adeni Babalola just explained. So, we have weekly analysis, which gives us a preview of what to look out for in the new week. And the Forex Morning Mastery is just a follow-up detail to our weekly video. So, thank you very much, Adeni Babalola. So, in the absence of no questions, I want to assume that we are all on the same page here. And in that regard, we shall be moving on to the next asset on our watch list. But if you still have questions, don't worry, drop them in the comment section. I will be attending to every questions that I see there. So in that regard, we are moving on to the next asset. So the next asset on our watch list for today is the GBPUSD. What a phenomenal move is going on right now. We initially had the privilege of joining a buy position yesterday as we were able to scoop in over 100 pips before the retracement began. This in the last, I think since when did that happen? I think since the early hours of today, we begin to see a retracement. And in fact, if you had moved your stop losses accordingly, you must have been taken out of your position. And it appears things are not looking quite well for the pound sterling at this point in time, as recent reports from the United Kingdom indicated a slight easing in wage inflation for the month of August. And as a result of this, we begin to see some bearish traction currently going on in this market. And of course, remember, we're still looking forward to the retail sales data coming up much more later in the day, which would also be giving us an insight into how to capitalize on a potential next move. Now, the first thing I would like us to do here is to run through how the week started for us all and what really led to the decisions we've made so far this week. Now, for those who don't have not seen my video on the GBPUSD, I would suggest that you watch my Forex Morning live session for yesterday, as I did a top-down analysis on what is going on from an holistic perspective, after which we were able to identify a key level and structures that we will be using to guide our trading decisions for this week. Now, with that being said here, let's run through what really happened during our live session yesterday. So at the beginning of the week, we noticed that the week started on a strong bullish note, as you will see here, and price was confined between the 1.21625 and the 1.21375 area. And the fact that price remained above our key level, remember we had this key level situated at the 1.21250, we were of the opinion that price will go to the upside. Let me zoom this out further so we can see how that key level has been playing a major role in determining the buy pressure in this market. So since last week, the last week of the month of September, this level here had played a major role in pushing price to the upside. Now we saw what happened here. Remember, we were anticipating the breakout of the resistant line of that range, and I think during the live session yesterday we already had a breakout of that structure. So I was of the opinion that if price drops back, we're having a retest, then we are looking forward to an uptrend move, which was exactly what happened. Price came back, retest a couple of times, and we had another breakout of the 1.21750 level to capitalize on the uptrend continuation. So we had two buy positions as at yesterday, as we saw the first buy position move about 60 pips into the 1.220 area. Then we also saw the second buy position moved about 45 pips. So we had about over 100 pips before the bearish momentum began. And if you had moved your stop loss, you must have been taken out at a worst case scenario, considerable profit, or worst case scenario break even if you had moved your stop loss to break even. Now, with the current situation going on in the market right now, how do we intend to join the next potential move for today? Are we going to continue buying the GBPUSD, or are there chances that sellers could come in even before the breakdown of our weekly key level happens? Now, to guide our trading decisions today, I have this newly identified ascending trend line after connecting the series of higher lows here. So this trend line here is going to be playing a major role in determining how we are going to be moving for today's trading session. And if you look at what is going on right now, price action is currently trading around that trend line that is between the 1.21750 and the 1.2165. So you would agree with me that we are at a crucial juncture in this market. We are depending on how participants react to the structure will be determining what our next line of action will be. So at this point in time, I will advise us to exercise patience, and for us to join an uptrend scenario here, I would like to see some reversal setup unfold around this area. It could come in the form of maybe a double bottom structure around here, where the breakout retest of the 1.21750 will be a beautiful confirmation to join that uptrend move. So let's see if this breakdown here will turn out to be a false breakdown. And if it does, we continue buy pressure around this area, and price climbing back above that ascending trend line will be a beautiful opportunity to be part of an uptrend move. And I think price will go to the upside. I'm holding on to a bullish bias actually, but if the market breaks down that ascending trend line and then retest it, then we want to start considering selling. Now, to sell this one, I will need price to first of all break down the structure, close below that level, and then look out for retest of structure on our lower time frame. So we scale down to the 15 minutes, 10 minutes time frame. Look out for price coming back to retest the trend line or the 1.21625, or there's that zone around that 1.21750 and that 1.21625. This zone right here, we see a retest of structures. All we just want to see is signs that buyers are finding it difficult to climb back above that ascending trend line. Then we can start considering selling this asset here. So where we are right now, we need to exercise patience. This whole setup I'm talking about here is likely going to be taking a minimum of 2 hours before it evolves. So patience is required at this point in time. So let's see what happens here. Reversal patterns, double bottom structures, head and shoulder pattern will be welcoming buying opportunity above the 1.21750, and if price breaks down the ascending trend line, retest of structure is our confirmation to join a decline on the GBP USD for today. So these are my views on the GBP USD. It's a simple setup we have here. So let's exercise patience and wait for the structure to mature. And trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. I don't know if you have any questions or you need me to do further clarifications. If you do, please let me know in the comment section. So I will take the next 10 to 15 seconds due to the lag between my live speaking here and when you receive my my data over there. So the next 10-15 seconds, I will take it off to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading decisions today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving right into the next and last asset on our watch list for today's trading session. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, we have a very interesting situation going on right now. Remember, we had a sell position, and in fact, the sell position did not do very well at all, as price action continued to find buy pressure around that 1915 zone area, hereby negating the potentials the sellers have in this particular market. And for those of us who are part of my who are with me on both my Trading View and Telegram platform, you must have gotten an update as to how we are going to be managing the trade today. Well, in the wake of the Israel-Hamas conflict and the likelihood of the Federal Reserve to maintain an unchanged interest rate in the month of November, the market risk sentiment is somewhat positive in the favor of the gold at this point in time. And if you also take into consideration the this crisis too, majority will want to put their funds in assets such as gold, silvers, and the likes, compared to placing it in currencies which are always fluctuating and may be affected by any slight economic turmoil. Now, with the situation we have here, let's talk about what really happened yesterday and what led to the decisions we made. So during our live session yesterday, we acknowledged this strong impulsive move that started last week Thursday. We saw this impulsive move, and I was of the opinion that we might be seeing a retracement, that is profit-taking activities that could incite a retracement into the zone between the 1900 and the 1880 to incite an uptrend move. And with this idea in mind, we also noticed a range initially. As you will see, the new week started on a strong bearish note, and coupled with this fact, breaking down the 1918 zone here, I was thinking that price will continue to the downside, and in fact we had a TP target around this area, but unfortunately we saw what happened. We saw price break down the structure. I said a retest of structure will welcome selling opportunity, which of course triggered a sell position, and the inability of sellers to break down this 1915 zone is a red flag for me, at this point in time. So I said here this morning that for those who still have a sell position, I will be suggesting that you close your sell position with a small loss of about, I think about 5 pips, 6 pips loss, based on the fact that price is yet to break down that 1,915 zone, or probably reduce your stop loss a little bit into this area around the 1,923 area to minimize the risk on this one. Now today, how are we going to be trading this for today's trading session? Well, the first thing I did this morning while trying to dissect the current market structure was this descending trend line after connecting the series of lower highs. And of course, you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we want to feel comfortable in a sell position. But despite the lower highs here since the beginning of the week, you will see that price is yet to find a lower low to emphasize the strength of the sellers. So at this point, the inability of price to find lower low here is for me a sign that buyers are gradually gaining momentum. And if you take another look at the higher lows here, you will see that we have something like this. And if we take a closer look at this and looking at what chart pattern this whole price movement is forming right now, you will see that it's beginning to transition into a uptrend continuation pattern in the form of, let me call it a symmetrical triangle, as you will see right here and right here. And whenever we notice this kind of setup on our chart, this is a sign that price may likely continue to the upside. And what we are going to be looking out for is the breakout of this descending trend line, breakout retest of the structure to welcome buying opportunities. Now, if you look at what has been going on here in the last couple of hours, you will see that price appeared to have broken out of this trend line for the first time this week. And because of this breakout, which interestingly lines up with that 1,918, just above that temporary demand zone we just identified here, I'm of the opinion that price action is back within the buyer's territory. And as long as price remains above both this descending trend line and the 1,918 level, I will continue to maintain a bullish bias in this market. Now, how do we intend to capitalize on this move? Now, for those who had bought the breakout here, well done to you. Just ensure you have your stop losses in place. So for those who had bought above the 1,918, having a stop loss of about 45 pips or 50 pips max seems quite reasonable at this point in time. But for those who had missed out on the breakout of the structure, well, I would want us to exercise patience here, and let's see if the market will be doing a retest of structure by pressure to incite an uptrend move. So if price does a retest of that structure, then we want to be getting ready to buy. So this ascending trend line here is going to be playing a major role in guiding our trading decisions for today. So as long as price remains above this ascending trend line, we shall feel comfortable in the buy position. Now, what happens if price does not come back to retest the trend line or the resistance line that was broken this morning? Then if this does not happen, then we can easily position ourselves above this resistance line here. So we have a level just exactly at the $1,923 area. So we do want to be marking that level out on our chart. So if price goes on to break out of the 1,923, so for those who are asking in their mind right now that why the 1,923 level, well, if you look at the structure following the bearish impulsive move we noticed yesterday, we saw that buyers were finding it difficult to break out of the structure throughout yesterday's trading session. And the inability of buyers to break out of that structure is a sign that this area is strong for sellers' presence at this point. Now, if price will break out of this level today, taking out all the sell positions there, it's going to be a beautiful signal to join an uptrend move at this point. And if price continues to climb up, then we know that the breakout of both the 1,930 and the $1,927.50 level will be welcoming more buying opportunities. I think we talked about this yesterday, and I still personally have a buy stop order above that structure with the hopes that price will continue to the upside. So on the XAUUSD today, I'm holding on to a bullish bias as everything is just pointing in that direction. So let's be on standby to capitalize on that move. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. And if we are going to be considering selling here today, what is it that we want to see on this chart that will make us feel comfortable or feel confident changing our bias from bullish to bearish? Well, the first thing I would like to see here is for price to take out this temporary demand zone. Remember, this zone here has been an area where sellers have struggled since the beginning of this week, making it a very strong zone for buyers in this particular market. Now, for me to feel comfortable selling here, I would rather see price break down the structure with an engulfing candle or probably strong volume of selling pressure here. Then if price will break down this temporary demand zone, then at this point we can start considering selling. And a breakdown of the structure as well would have also break down the descending trend line, so we will be back within the seller's territory. But to make things to be very confident, I would want to see some retest of structure. It could be the retest of the descending trend line or the ascending trend line. But most importantly, we want to see signs that buyers are finding it difficult to climb back above the 1,918, which would reflect on the chart as continuous selling pressure below the structure for us to join a downtrend scenario. Then we also have the 1,908, which happens to be the lowest point price action has been for this week. And if price will break down that structure to the downside, then we want to be adding more sell position to our existing trade. So for the sell position, the TP target still remains between the 1,900 and the 1,880 area, which happens to be our potential TP target for sellers, and that is that same area we are looking out for buying opportunities if we begin to notice reversal patterns within that zone. So this is my view here on the XAUUSD for today. So you can see where we are right now. We're at a very crucial juncture, and as long as price remains above this ascending trend line, we feel comfortable buying the XAUUSD for today. But if a breakdown of the structure happens, we want to start shifting our momentum to bearish at this point. So I will of course be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So these are my views here on the XAUUSD for today. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So if you have any questions as regards to my explanations or whatever we've discussed so far today, please feel free to let me know in the comment section below. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. That reminds me, if you have found this content helpful in making your independent trading decisions for today, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you in advance for doing so. And for those who have already clicked the like button, I really do appreciate you guys. Thank you very much for doing so. So in the absence of no questions, I want to assume that we are all on the same page. So I just dropped the XAUUSD live window, the link to the XAUUSD live window in the comment box below. So you want to be clicking on that link, click on the notify me button so you can get notified as soon as we come online. So for those who don't know, the XAUUSD live window is a platform that was born out of popular demand from this community, and during this session we usually monitor the XAUUSD price action live right here on this channel. So you want to be part of that session to see how we are going to be capitalizing on trading opportunities on the XAUUSD live right here on this platform. So I look forward to seeing you in that session. So on this note, I want to appreciate everyone. It has been a wonderful moment with you guys today, and in fact during the session we were able to attend to three major assets, which includes the XAUUSD, popularly known as the gold spot, the GBPUSD, and of course the USOILSPOT, and all of which we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the market, and of course use that information to position ourselves ahead of the London and the New York session. So I encourage us all to exercise patience and allow our structures to mature before we jump in to any position. So it's on this note I wish us all the best of luck, and for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And trust me, the more time you spend with us, the better you get to understand how our strategy works here, and eventually be able to use the information you gather here to make your own independent trading decision. So I look forward to seeing more of you tomorrow as we come back here again to review how well these assets have been doing, and at the same time get ready for tomorrow's trading session. So on this note, I wish you all the best of luck and do have a wonderful evening. Looking forward to seeing you right in the comment section of all my public platforms, and of course the XAUUSD live session as we continue to monitor price action. Thank you very much, Ikas Diary. Thank you very much, Adeni Babalola, and thank you very much for everyone. Do have a wonderful day. Bye bye.